In this video, we'll walk through how to set up a trade using the trading calculator, based on available margin. We start on the left by selecting the trading pair. In this example, we're trading crypto, and we chose BTC. On free plan, these are the default settings. Next, under risk mode, we choose available margin. This is the only option available for free plan. Our account balance is set to 10,000 USDT, and we're using 50% of the available margin. This means the calculator will automatically size the position based on half of our balance. Next, let's move to the main calculator. For direction, we select long. Stop and target are set to price, which means we define our stop loss and take profit using exact price levels, but you can also find other options there. Margin mode is set to isolated, so only the margin assigned to this position is at risk. You can also add extra margin to push your liquidation price further away. We set the entry price to 100,000. The stop loss price is 80,000. The take profit price is 150,000. Leverage is set to 10 times. You can adjust this using the plus and minus buttons, or type the value directly. Below, you'll see several toggles. Use market order fees defines which fee type is used in calculations. On the free plan, fees are set automatically to 0.06% for taker fees and 0.02% for maker fees, and cannot be changed. Next toggle is include fees or funding in liquidation price, which accounts for fees and funding in liquidation price estimate by reducing your margin buffer. You can also toggle on apply funding and set your funding rate and number of periods. Once everything is set, the results update automatically. Quantity shows the position size in the base asset. Notional shows the total position value. Initial margin shows how much margin is required to open the trade. Used leverage confirms the effective leverage applied. Below that, you can see a clear summary of your trade levels: entry price, stop loss, take profit, and the estimated liquidation price. Break-even price shows where the trade becomes profitable after fees. P&L at stop loss shows the potential loss if the stop is hit, both in USDT and as a percentage of the balance. P&L at take profit shows the potential gain and the risk-to-reward ratio. At the bottom, the cost breakdown summarizes fees and other costs included in the calculation. This gives you a complete overview of the trade before you ever place it. In the next video, we'll cover additional paid features on this page that are currently locked on the free plan.